Good morning, students. Wishing you a very warm, a hearty good morning. Now, yesterday, the sun transited to another ras, which is the Makar ras, and this marks the start of a new season, the start of a new era, and it is also important to understand. See, why in India we have so many different celebrations. One, I believe, is to bring people together because otherwise we are occupied in our daily activities. We do not connect. We do not meet. In earlier times, at least villages, people were closely connected, so they used to meet. But far off peoples would meet only at the time of any festival, cultural celebrations. Secondly, I believe this was a method of pushing economy. How? If you see in all our cultures, which runs through west to east, south to north in India, you will find that all our cultural traditions during all our different festivals or cultural celebrations make us spend. And many times they make us spend on smaller things like during Deepavali, we will buy diyas or we will buy brooms. Even during this festival, which was celebrated yesterday across India in different forms, we not only buy the rich or luxury items, we buy the smaller items. If you observe keenly, it was, I think, deliberately designed by our ancestors in this fashion so that all sections of society would earn out of this and the economy would roll. And this, I believe, is one of the interesting insights about our celebrations. And this is the reason why I believe India stands strong economically despite of all the global turmoils going on. Because we have so many reasons to roll out or move the cycle of economy by way of spending during all these festivals, cultural celebrations, like yesterday or since a week, kids are flying kites. Again, who will be making and selling these kites? Also, across India in different forms, when this Makar Sankrant is celebrated, we are bringing together people, we are reviving our economies, we are also, now this is another interesting part, giving a psychological push. See, every celebration brings in a different type of emotional, psychological push. Makar Sankrant marks the start of a new era. It is the shifting of sun from its southern periphery to the northern periphery, which also marks that whatever was wrong, whatever went bad in the previous year, now this is again a new opportunity, a new chance to make it correct. We entered Uttarayan, the sun entered Uttarayan. So you also get this psychological message that okay, whatever was done was done. Let us make a restart. So I believe that we should follow our cultural and religious different activities, different festivities, different celebrations with all these things at the back of our mind. Many times I've seen students do not like participating in cultural activities or feel that all these things are outdated, all these things have no sense. Let me tell you, if you understand it from all these perspectives, you will realize that all these things were designed not only keeping religion in mind. In fact, I many times feels many of our celebrations are having the economic, emotional, psychological connection rather than a religious basis. Yes, it has been linked with our religion. It has been made part of our religion so that we follow it, so that we do it religiously. See, many times this particular phrase is used, that study religiously. Why is this phrase used religiously? Why this word is used in the phrase? Religiously does not have any connection with God. Why I'm emphasizing this? Because nowadays I've seen either we fight on the name of God, or we distinguish out each other on the name of God, or many of us are resisting things only because it is linked to God. I believe all these things are incorrect because we have not understood the real essence of these things. Now I'm on the third part where we resist. If something is said to be part of your culture, part of your religion, somehow I've seen young students, especially of your age groups, even younger, resist it. But if you understand why these things were designed, last, after designing, they were linked to God, they were linked to religion, so that you follow it. But the purpose is much bigger, much larger. So I wish you all, not from the perspective of our religion, of our communities, or our culture. I wish you from the perspective of rise in knowledge, growth in your careers, and a great year ahead from the perspective of upgradation, escalation, and also you connect to each other, get closer to each other, meet people from different other religion, communities, different other cultural backgrounds, because this is what we are meant to do. This is what, how all of our traditions, cultures have been originally designed. It may be interpreted differently by some sects, and it may be interpreted differently by some religious heads and percolated in a different, or I should use the word wrong manner. But that is a different thing of it. If you see the original, if you read the original text of any of our religious books, you will find that the purpose in all religion, religious text, and books is the same, expressed in a different manner, interpreted in a different manner, applied in a different manner. But that is the best part of our country. We live in a diversified environment, something similar to your subjects. All subjects are diversified, and within the same subject, like income tax, every chapter is diversified. Every chapter may have some provisions which are conflicting with other chapter provisions, but that is the beauty of the subject of your course and of our country, India. So I wish that this Makar Sankrant, and by whatever name you all celebrate this day, but remember the essence, the purpose, and the bigger goal of all these celebrations remains the same. So I wish that this brings a new dawn in your careers, in your professional lives. If somebody made some mistakes, missed out on some things, no worries. Take this as an opportunity to restart, redesign your schedules, redraft your goals, and remember one thing: time is never lost. You always have time. You always have an opportunity. It is all psychological. So make the most of this event, I will say, to bring that transformation, bring that change in your lives. specifically your career, your wisdom, and the knowledge. With this, let us start our session today. I'm expecting firstly questions, queries on the topic of other sources because we have covered 90%. Only one aspect relating to gift is pending. Everything else is completed. So I expect queries. So yes, a very warm morning to everyone. Yes, Linga R, Rashmi, Yasumi, Shamli, Neeraj, Tisha, happy morning. And yes, happy Makar Sankranti, happy Pongal, happy Lodi to everyone. So let us start with your queries, your doubts. In brief, if I have to just summarize, we'll come to the recapitulate part. Here, you will get everything at one place. Yes, we have to deal in detail the gift part, but let me just summarize. So we are dealing with the topic of other sources. Other sources is made up of two things. One is the residuary part, which is as per 56.1, and the specific part, which is as per 56.2. So for residuary, you have to first check if the receipt is income, and second, not covered under the other four heads. This is sufficient to bring it to charge under other sources. But besides this, you have to understand and remember there are specific items which will only fall in other sources. So even if your nature of activity is business, still dividends earned even from those shares held as stock in trade, because you are a dealer in shares, will always be part of other sources. Even if you are regularly participating in lotteries, crossword puzzles, let us say you have made that as your business. Gambling is your, like, there are people who are only involving into that. That becomes something like their regular activity, like business. Still, it will only fall under other sources. Then, this is the gift part. I'll come to that in detail. So I'm just skipping this. Next, if you receive interest on compensation or enhanced compensation wherever your asset was compulsorily acquired, the compensation portion, both the initial and the enhanced, is part of capital gain, or if by chance that land is stock in trade, then part of PGBP. But the interest, if you are receiving this compensation late, will only be other sources. Then advance which you received because some negotiation was going on for transfer of your capital asset. This negotiation failed, so you forfeited the advance. If this is forfeited before this date, it will be subtracted from the cost of acquisition. But if it is forfeited on or after this date, then it becomes taxable in the year of receipt, or I should say forfeiture. So the year in which you have received and forfeited, that is the year. Now this is a capital receipt, but it is considered as taxable. Then comes compensation. Importantly, it is relating to termination of your job. Still, it is not part of salary head if it is paid to you by a person other than your employer, present or future. If it is paid by a person who is your present employer, or who is asking you to leave this job to so that you can join that particular person's job, so he is your future employer, it will be salary. If not, it will be other sources. Then yesterday we discussed in detail that when you receive a sum against your life insurance policy, except these two, because keyman is always taxable. Then you have to check the exemption under section 1010D. And in 1010D, we discussed that what is not exempt is the policy where the premium exceeds the percentage, 10%, 20%, and also now from 2023, the aggregate premium exceeds 5 lakhs. Such policies are not exempt under 1010D. Now, these policies will also be exempt if the policy is received on death. But if it is received on maturity, these policies are not exempt. Similarly, amount received under Keyman insurance policy is also not exempt. All these amounts will be taxed under the head other sources after subtracting the premium amount for which you have not claimed deduction under any of the provisions. Now, related to other sources, the incomes which are falling in other sources, there are certain incomes which have exemptions, but you should remember that all these exemptions apply only under the old scheme. Because under the new schemes, all these exemptions have been as good as deleted. So these exemptions apply only under the old scheme. So what are these incomes which are having exemptions? Interest on a NRE account. Then compensation which is received from either center or state or local authority because of any mishap or disaster that has happened, and the government compensates you for that disaster or mishap, that is exempt. So it may be train accident, it may be some terrorist attack. There are so many incidents, unfortunate incidents that happen. People lose their life or they are severely injured, and the government grants compensation. Then comes educational scholarships. Most important, only educational scholarships which you receive are exempt. And importantly, it is immaterial who is paying this scholarship. So even if you get it from private bodies, NGOs, or government, all are exempt. Then comes the allowances, daily allowance or constituency allowance, which is received by MPs or MLAs. Their allowances are exempt. Next, where you have received award, and award is instituted by the government or it is rewarded by the government for approved purposes. So wherever you receive awards, for awards, the condition is it should be by government only to be entitled for exemption. And next is similar to what you studied in salary. If commuted pension is paid by LIC, that is the insurer who is not your employer, firstly, this will not come under salary head, it will come under other sources, the pension that you are receiving. And if you commute this, then the commuted pension is entitled for exemption. Then comes deductions allowed from your other sources, incomes or the receipts which come under other sources. So first is where you are receiving dividends, except the dividends which is recently added in the form of the amount received on buyback of shares. So except this, against dividends, you can deduct only one expense. What is that expense? If for investing in those shares, you had taken some loan and the interest you are paying for that loan, which you had taken so that you can utilize the amount for investing in shares, only that interest income is deductible against the receipt or the income from dividends. Importantly, this has an upper cap that the deduction of interest cannot exceed 20% of such income. So such income means the dividend income. So whatever is the dividend received, against that when you claim deduction of interest, the deduction of interest is allowed up to 20% of the dividend amount. Next, the next income which is commonly taxed under this head is interest on securities. Against this, if you have paid any bank charges in the form of bank commission, many times the bank debits this to your bank account, that bank charges or commission is what is deductible. Next, now this point is similar to what we studied in PGBP. Whenever you recover from your employee, what you recover? Contribution against any of these funds. So we call this as employees' contribution. So when you deduct this from their salary, firstly, it is treated as your income. If it is business employee, then business income. If what you're doing is not business, then other sources income. Now, when you deposit this amount, but when before the due date, now here I request students to be attentive because many times we mix up between this. In PGBP head, we studied that for certain payments, the payment or the deposit should be done by the due date of filing returns of income. But that is applicable one for TDS, two for payments under 43B. Now 43B covers Provident Fund contribution, but whose contribution? Employer's contribution. I'm sure by now, since you all have done salary chapter, you know that in all these employee funds, Provident Fund, Superannuation Fund, Gratuity Fund, ESI Fund, in all these funds, employer and employee both together contribute some amount. What is paid out of employer's pocket is called as employer's contribution. What the employer deducts from employee's salary and then deposits, that is called as employee's contribution. For employer's contribution, the rule is it should be deposited by the due date of filing returns because employer's contribution come under 43B. But when it comes to employee's contribution, which I have first recovered or deducted from you out of your salary. So first when I deduct, it is treated as my income under the respective heads. And then when I deposit it, now interestingly, you are depositing both contributions, your own contribution, that is employer's contribution, plus the employee's contribution. Interestingly, this particular point is applicable only for the employee's contribution, that it should be deposited before the due date of the respective acts. So Provident Fund contribution, so go to Provident Fund Act, which is every month 15, or in some cases every month 10th, or in some cases every month 17th or 20th, whatever. So different funds have different due dates. All these funds due dates have to be honored. So for employees contribution, you get deduction if it is deposited by the due date of the respective acts. Then come income relating to giving on rent. What? Your assets, which may be with or without building. So where you give any of your assets, again, this point is subject to whether giving on rent is business. If it is business, then you won't come to other sources. The income is taxed over there and the deductions are allowed over there. But if renting is not your business, you are having these assets, and whenever somebody asks, you just give it to them, and it is not done as a part of your business, then the renting income is part of PGBP. In such cases, whatever expenses you have incurred on the asset, now what are these expenses? Repairs, maintenance, or depreciation, or insurance on its insurance premium on its insurance. All these are the expenses which are deductible. If after the death of employee, the family members are receiving a pension, it is called as family pension. Family members are not the employee of the employer, so the family pension is their income under the head other sources. Here there are two exemptions. One for members of armed forces and those who have received some gallantry awards. Now, in these two cases, pension is fully exempt. In all other cases, the family pension is taxable under other sources after giving you this deduction. Now, the deduction is least of two amounts or lower of two amounts. One is the 1/3 of the pension or the maximum limit, whichever is less. Against the interest, which is for the compulsory acquisition compensation, you have a flat deduction of 50%. Now, what is not allowed are the expenses or similar to the 40 to 43B list of PGBP. So personal not allowed. Then interest or salary paid outside India for which TDS is not deducted. Or after deduction not paid. Then other expenses which are paid in India for which TDS is not deducted or deposited, over there 30% is disallowed. And in case of foreign payments, 30% is not written, means 100% is disallowed. We have studied this in PGBP. Then wherever payment is made to your related persons, the amount which exceeds your FMV, that excessive amount is disallowed. Where payment of any expense is made to a person in a day exceeding 10,000 or 35,000 for freight, and it is done by way of cross check or bearer check or cash, it is disallowed. Next, against the winnings earnings from lottery betting, which we call as winnings, no expenditure or allowance can be taken. So deduction is not allowed against winnings. So winnings are taxable gross. Fine. Just allow me a minute. Okay. Let me go to your queries, if any. Okay, good question. Nagraja asked me, sir, whether subsidy received from government is taxable or exempt. See, very good point. One thing I would like to clarify, students. It is again a misconception, like how we had for capital gains that every capital receipt is capital gain. Similarly, we have for other sources that any receipt which is not covered in the four heads is taxable under other sources. All these are misconceptions. Similarly, there is a misunderstanding by all that whatever is received from government is exempt. No, there is no such rule or blanket rule. Yes, there are some items received from government which are exempt, but they are exempt. Why? Either because it is not income, two, either because it has been specifically given an exemption, like we just saw awards or compensation at the time of disaster. So first keep this in mind that anything and everything received from government is itself not exempt simply because government is paying. That is not the reason. Now coming to your question, subsidies. See, generally you are receiving subsidy because let us say you are doing a business and you have made some export. So there is a subsidy. Or you're doing a business in some backward area, in some remote area, in some specified area, and to promote that area, to promote that business, to promote that sector, the government said that I will give you some subsidy. Now, in such cases where the subsidies are received, it is part of your PGBP. If it is a capital subsidy, means what? You have received against the investment you made in your capital asset, where the subsidy is like this, that whatever is your capital outlay or whatever is your capital expenditure, I will reimburse 60% of it. Then the rule is you deduct that subsidy from the cost of acquisition of the asset itself. So it is indirectly taxable. Means what? It reduces cost. So in future, either you'll get less depreciation or whenever you sell the asset, the capital gain will be higher. Or second is revenue subsidies, which is not linked to acquisition of an asset, but it is relating to your business or exports. All these are your revenue incomes under PGBP. Now, besides this comes some other subsidy. Like, I'll give you a simplest example. Now it has gone away, but it is still prevalent in some parts, and earlier it was prevalent across India. That is when you purchase a gas cylinder, what government said, you first pay the full amount and then we will reimburse you back in your bank account the subsidy portion. Now, such payments are non-taxable payments. Why? Because they do not have the color of income. So only such personal, I will say, payments can be excluded. Otherwise, the blanket rule is not that anything from government is non-taxable. Kambira says capital expenditures are not taxed. Okay. So I did not get this point. Tisha says, sir, will you please give examples of modifications of terms? See, I'll tell you what it means. This is there in salary head also. This is there in PGBP head also. Wherever compensation is given, it may be given for two things. Either for termination. If you see the word, one is termination. Terminal means I'm ending your contract. In case of salary, it is the salary contract. That is, I'm terminating your job. Or second, in case of PGBP, I'm terminating your contract relating to doing business or relating to agency. Second part is modification. Now, question is, why for modification there will be compensation? So first, what is modification? Example, you are holding the post of senior manager and I say, I modified to junior or I modified to some lower grade because of which your salary package is going to reduce. For such thing, I'm giving you a compensation. That is example of modification in terms of employment. Second, in relation to PGBP, where let us say you were my sole agent of a particular area. So anything sold in that area would go through you only because I have made you my sole agent. Now I want to modify this term and say that no, now I'll make multiple agents in that area. But this will lead to loss of business to you. So I'm giving you a compensation. So both these are examples of modification, one which is relating to employment contract, one which is relating to business contract. Nagaraja says 43.1 in PGBP. Now, what is 43.1, Nagaraja? Do you mean to say 41.1? So, Nagaraja, I gave answer to you. Subsidy received from government, taxable or exempt. I gave you example. I gave answer to this. That if it is part of business, it is taxable over there. I already answered this. And I think you want to say 41.1, not 43.1. So I already answered your question at the start itself. I, in fact, deliberated in detail. If it is relating to capital asset, you reduce it from there. If not, you will treat it as PGBP income. I already answered it. Now let us come to the point relating to gift. Now, what is this section all about? 56 to clause 10. If you remember, yesterday I had mentioned to you all the brief history of this section. This section was first introduced in our taxation law in the year 2006, then amended in 2007, then expanded in 2010. But at that time, the clause was different. Now you are seeing 10. At that time, it was some clause 6, some clause 7. Later on, they changed this whole section, made altogether new section, new clause, which is in 56 to 10. Now, just give you the timelines, the history, so that you'll understand that this taxation was not there originally. It was brought in, it went through some amendments, and then finally, the present section in its present form is brought in a new clause, that is 10. Why it is important? Because maybe at final level, when you are studying the law in more detail, if you are referring to gift, you may also get clause 6, clause 7. So you should not get confused. If we studied at inter clause 10, why we are getting to study clause 6, clause 7? Because there is the old provision in that clause, and this is the presently applicable provision in clause 10. Now, Tisha is asking, sir, will you please give examples? I think I gave, na? Tisha, why is this question again? Maithili, IFSOS is income from other sources. Tisha, did you ask the question again? No, this is the old question. Bonus received in LIP means. Dhanalakshmi, bonus received in LIP means, if you remember yesterday, I had explained that, see, your policy is of 25 lakhs. But policy many times are of two categories. One is with profit policy and without profit policy. If it is without profit policy, you will get 25 lakhs only. But if you have taken with profit policy, so insurance company will share some portion of their profit with you. This is with profit policy. And this profit will be added to your policy amount every year. So every year till the term of your policy is going on, whatever profits the company is earning, some share is given to you all who you are the policy holders. Now let us say your original policy is of 25 lakhs, but because it is a with profit policy, you are eligible to share in the profits. Now let us say your policy is of 15 years. After 15 years on maturity, you will not only get 25 lakhs, you will also get some extra amount, which is the share in profit. This extra amount, as you also rightly understood, is called as bonus. I've just explained you what this extra amount deals with. So your understanding is correct. It is the extra amount over and above the capital sum assured, which is the policy amount. I just explained what it represents. It represents the share in profit, which the insurance company is giving to you. And that is what is over here called as with bonus policy. So practically it is with profit policy. Okay. Now coming to this point, I always prefer taking this point separately because this point is very interesting. This point has a very good or very detailed provisions made. So it is important to decode this. Interestingly, we all call it as gift. In fact, I've written also for your reference. But let me tell you, if you read this entire section or the old clauses 6, 7, nowhere they have used the word gift. This is the beauty. So for this section, nowhere the law uses the word gift. But why we all are using the word gift? Because in practical sense, this is what they intend to cover. But we should also understand what the law says. So the law is using this phrase. And we are representing this phrase by a single word gift. Now, why to first understand this? Because something you may not call it as gift, but that is also covered over here, like this part. See, generally what we understand as gift or what we will call as gift in our normal sense is what you receive free. So maybe on some occasion like your birthday or on any achievement or on any functional day like Holi, Diwali, Eid, Lodi, or any such day, your parents, your ancestors, your relatives, they give you some cash or they may bring something for you, which generally we call it as gift. But as I said, the law has not used the word gift. So keep in mind, we are using it as a short form to avoid repetition of this long sentence or this long phrase. Now, in this, you have to understand this part where you have purchased something for less than its fair value. I'm not using the word fair market value. Why? Because fair market value is a concept. Here I'm using the word fair value, or you can say its normal value just to avoid the confusion. So if you have purchased something for less than its normal value, then the difference between what? Normal value minus purchase value. This difference is what you are benefited. This benefit is also covered in this clause. So one, whatever you receive free, which we normally understand as gifts only. Now, many times you may call it as gift, you may call it as anything. That is why I'm emphasizing on this, that though we are using the word gift, though everybody uses the word gift to represent this clause, but practically what we call as gift and what is covered over here is very different. We call limited things as gift, but this section, this clause covers unlimited things. So one, you receive things free. Two, you purchase something for less than its normal price. Then the difference, the benefit, what you have got, whatever you have saved by paying less, this difference is also gift. So first, let me make this clear. What is covered? So though we are using gift, don't be misguided by that, because as we proceed, some confusion may come up, but this is not gift, then why we are taxing it here? Because the act has not used the word gift. We are using it for our convenience. Second thing, what is important? Now I'll be using gift only, but you have to keep in mind it covers two things. One, which is free, received free, or purchase for less price. Now what will be covered in this? Two things. Either money is received. Now this is the most common thing which we also know that this is gift, or which we call also this as gift. So one, what is covered is when you receive money, or second, if you receive property. Again, how? Without consideration, or the value of property received is for inadequate consideration. Inadequate means you have purchased it. Keep this in mind. Because many times when we use the word gift, we do not cover purchases in that, but this will cover your purchases. Now, this is the most interesting point. Now, the second interesting point is what could be this property? The property could be movable or immovable. Now, for immovable, what will be covered is land building. One second. I'll take you to the definition of property because this is the valuation part. Now, interestingly, if you receive, now I'm changing this word property for kind. So either you receive money or you receive something in kind. Now, if you receive something in kind, that kind is firstly replaced by the word property. So the law uses the word property. But what I want to explain or highlight is every property is not covered here. What is covered here is the property should be your capital asset. So the person who is receiving it, for the person, this should be a capital asset. Now, what is capital asset? What is not capital asset? We have discussed in detail in capital gain chapter. You have to apply the same definition which you studied in section 2, clause 14 in the chapter of capital gains. So if you receive something which is not a capital asset, so what will not be covered? So what is not considered as gift means what will not be covered here, what will not be taxable is first stock in trade of business. What next? Rural agricultural land. And most important, personal effects, except, if you remember, we had some exceptions. What were those exceptions? These were the exceptions. So personal effects, except jewelry, archaeological collection, drawings, etc. Except these, the personal effects were not considered as capital asset. In other words, this is capital asset. Now, if you receive any of these things as gift, again, when I say gift, you have to remember two things, either free or you have purchased this for less than its normal price, then whatever you are benefited. So if you are receiving it free, it means the entire value is your benefit. If you are purchasing it for less price, then the difference is your benefit. That is what is treated as income over here. Now, what are the other things? Immovable property, which you know is land building, share security, you know, then all these items, you know, and virtual digital assets also, you know, though this is covered at final level, but we now know what are virtual digital assets. So you have Bitcoins, you have virtual stamps, all these are virtual digital assets. So you receive either money. Now money will be received only in one fashion, that is free, or you receive something in kind, which is over here used or referred to as property, but that property should constitute your capital asset and it should be one of these things. Now for property, both the rules will apply. Either you get it free or you purchase it for less than its normal price. Then the money amount or the amount of money which you have received, or in case of property, if it is free, then the full amount of the property. If it is purchased for less price, then the difference amount of the property. All these things are treated as your income over here, but still some other provisions are to be seen. So you are receiving gift. The gift is your income, but subject to all these provisions. Thank you, Harsh, for your comment. Thank you very much. Tisha is asking like gift voucher. Yes. So even if you receive voucher, so that is also covered here. Yes, Rashmi. So personal effects which are movable are excluded from capital assets. So they will be excluded here also. Now, so students, you have to understand that these items, if you receive, and these item constitutes your capital asset, then only you will come to this chapter. Now, interestingly, this chapter or this rule has some exceptions also. They are saying non-applicability. Let me use a word with which you are comfortable. So even if you receive gift of money or any of the following items which we just saw, which is now let us call it as property. If you receive gift of money or property, but if you receive it in any of the following circumstances, it is outside this section. It means not taxable. So I'll write it here in simple words. Gifts received. Now, when I say gifts, you have to remember money or property, right? Received in following situations are not taxable. So if you are receiving gifts in any of the following scenarios, situations, they are not taxable. So they are exceptions. One, if you receive the gift from your relatives. Second, very important, on occasion of marriage. Now, who is relative? We are going to study. We have a definition. So I'm keeping this point aside for a minute. We'll come to that definition. Now, this point is important. It is not saying on the date of marriage. It is saying on occasion of marriage. Now, what is the difference? Let us say you are getting married today, 15th of Jan, is your date of marriage. So if 15 Jan is your date of marriage, if the section over here would have said on the date of marriage, then now we all know that during marriages, anybody, not only relatives, even outsiders who may be only your friends, who may be your distant business relatives. I'm using the word business relative, means business connections, your customers, your employees. Many people come to your marriage and they give you some gift. So obviously they are referring to that gift, but they have not used the word date of marriage. Otherwise, only the gift received on the date of marriage, for which people come to stage, you click a photograph with them, only that would have been excluded. But no, the section, the law says that we want to cover anything which is relating to the marriage. What is the effect of this part is, when they have not used the word date, what they want to mean is that even if somebody has come and given the gift before, or somebody has come and given the gift afterwards, many times this happens. Some people may not make it to your marriage. So either they come and meet you before and they give you gift. Now in different cultures, like in Maharashtra, there is a culture called as scaled one, where we invite if let us say I know the groom, I will invite the groom to my house for dinner. And at that time, I will give the groom some gift. So in different cultures, you have these traditions where you will give them something, may not be on the date of marriage, but either you call the person before marriage, or after the marriage, you call the couple to your house. And there is this small tradition, like here, as I said, in Maharashtra, it is called as scaled one. I'm sure different places would have a similar tradition by some other name. At that time, you give the person the gift. Now, the law is very well aware of these traditions, which is across India applicable. So they say that it is not only date. Even if you receive something before, on the date, or even after, we will cover all these things. Only thing that we want is you should be able to prove that why that person gave you this money or property as gift, because it was on account of marriage. It was connected to your marriage. Second interesting thing is, now this part is again important. You are getting married, but again our traditions have such customs whereby even your family members will receive something. So not only you, your mom, dad, maybe your brother, sisters, they are also given something on your marriage. So you are getting married, but they are also given gift. Again, this is part of our traditions and customs. Now, in such a case, interestingly, for them, this exclusion does not apply. So it may become taxable for them if other provisions of this section are satisfied. So only you getting gift, you means the person who is getting married, is only getting this particular shelter, this particular benefit. Is this clear? Then, if somebody has given you gift under their will, or after the death, you have received it by way of inheritance. I'm sure everybody understands inheritance. So there was no will, but you are fitting in the class one, class two legal here as per the law of inheritance applicable in our country. Then whatever property you inherit, which may include money, which may include different items, again, the rule is it should not be stock in trade of your business, it should not be personal effects, and it should not be rural agriculture land. So other than that, whatever you inherit, anyways, it is also outside this particular section, so there will be no tax. Now, this is something new to you all. What is in contemplation of death of the payer or the donor? Now, if you have seen some old Indian movies before 90, 1990s or 80s, if you see some very old movies, in that movie, many times a scene is shown. This was very typical in old movies. Nowadays, we don't find that in the present movies. That a person is about to die, either because of age or because of accident, and just before the death, the person gives one of the person something. Now, in old movies, it was shown that I'm giving you the hand of my daughter. Ki Baba, I want to marry my daughter to you. Or I have small kids and I'm giving you the responsibility. Such scenes are there. But why I'm referring to those scenes? What is contemplation of death? So if a person is expecting that the person is going to die in the near future, in 1 to 10, 20 days, or in a month or a year, and before the death, the person gives you something. Why? Because the person says, like in why I'm referring to these scenes, because over there, that particular typical point is there that now, anyways, I'm going to die, I'm going to meet God. So I'm doing this. So that is what is contemplation of death. Now, again, in all of our religious books, if you find, there is a reference to this. So if anybody has given you money belonging to them or any property belonging to them in contemplation of their death, we are keeping that also outside. So in earlier period, people did not used to make will, they used to do it like this. So that is also outside. Now comes an interesting part. If you receive anything from a local government, if you receive anything from a fund, foundation, university, educational institutions, hospitals, medical institutions, or any trust, or if you receive anything from any trust or institutions which are registered. Now, the difference here is here the word registered is not there. So that is the only difference. Otherwise, trust and institutions are here also and below also. Differences of registration. Then again, by any fund, trust, institution, university, or other educational institution, or any hospital or other medical. Now, why they're using this word other means other than the ones who are covered above. Now, if you see, further clarification is given below. So we have reduced from the above part the technical part because that is not required at inter level. So why there are multiple references? Because they are referring to different associations, trusts created under different sections of this act, right? So when you receive anything over here, now let me tell you practically what this is. What will your local government give you? Why, why this point is here? We just saw something relating to disaster compensation, but that compensation, if received in a particular scenario which is fitted in the disaster, then only it is exempt. But if let us say your local authority is giving you some amount for a similar thing, but it is not exactly a disaster, but something similar to that, something has happened locally because of which the local authority is giving you something. Then what is covered here? What is covered here are all types of subsidies, all types of what you say this scholarships. Like let us say you want to study CA, and whatever are your expenses, I'm sure you all would be knowing our institute is also giving subsidy, is also giving one more word is there scholarship. Now we have an exemption for scholarships, but again, it is not necessary that all subsidies, all scholarships will fall in that exemption. So even if they are not falling there in the exemption, see if something is exempt, it is outside anyways the tax. But even if it is not exempt, still here it may be outside taxation. Then comes all those ways which are not regarded as transfer, again, which we studied under the head capital gain. So if you have received something under any one of these clauses, if you remember, it was section 47 over there, which dealt with what is not transfer. So like gift, will, inheritance, all this is there. Though it is covered above specifically, but here it will cover all the other scenarios. So where you receive anything in such a fashion which is not regarded as transfer. Then, interestingly, if you receive something from an individual, how? By way of a trust which is created solely for the benefit of the relative. So in short, I create a trust for the benefit of my children, let us say. So it is solely for the benefit of the individual's relatives. So let us say in my case, my children, my parents. I create a trust. Then whatever is coming to the trust, that will be not taxable here. Then from such class of persons as may be prescribed, for the time being nothing is prescribed, then comes this important point. If you remember, in many states during COVID-19, where either the person passed away or the person was admitted, many states were running the scheme whereby some money was paid to that person or that family. So where the person receives, now interestingly, the point is you may receive it from any person. It may not be only government, but it should be received for what? In respect of expenditure actually incurred. So whatever you spent on the treatment of this COVID-19 and subject to conditions notified by government. So only conditions will be notified by government, but you may receive it from any person. So even if some private person has paid, some institution has paid, or government has paid, if it is for treatment of COVID-19, it is eligible for this non-taxability. Or if it is received by a member of a deceased person, disease means the person who has passed away, from whom? From the employer, or if it is received from any other person other than employer, then the amount is not exceeding 10 lakhs. Now again, why you have received? What is the reason? The reason is because that person passed away. And again, the reason is COVID-19. So either it is for treatment that you have received or because of death. Now this, if you recall the COVID-19 period, at that time, there were different government schemes under which you are receiving this money either for treatment or if the death was caused. So all these amounts, what we discussed here, if you have received gift in any of these scenarios, situations, it is not taxable. Out of all these scenarios, what is very relevant for exams is mainly these four. So for your level, inter level, mainly these four are the one which are relevant. So one, you have received the gift from relatives. We will study now what is relatives. On the occasion of marriage and only gift received by you, not by your family members, either on will or by way of inheritance or similar to that on contemplation of death. So if the gift is received, which may be money or property, in one of these scenarios, it is not taxable. Correct? So see, we are going step by step. What will be taxable? What will be not taxable? Yes, Mustafa. HF may be either from the Daya Bhaga or the Mitakshara. Nagraja is asking, sir, what if you receive it on marriage anniversary? Now, this answer I want from you all. You all tell me what will happen if the gift is received at the time of, what is this reply? Why you have shared a gift? What is your name? CV. Gift. Why you have to share a gift for a question? You have to give answer, not a gift. So, if a person receives something at the time of marriage anniversary, Nagraja, under which point it will be non-taxable, beta? You are saying non-taxable. Under which point? Then Lakshmi, you are mixing the salary part here. Who's this CV? Why am I always seeing the gift? Who is CV? It is me only. How is gift being shared by me? Again, in my reply. How is gift coming? I'm not getting. I'm not typing any reply. How come the gift is coming as a reply from my side? Yes, Mustafa, that's what I'm saying. CV is me. But how is this gift coming as a reply? And the same gift is coming again and again. Don't understand. Okay. No, no, Neeraj, it is CV is me only. I checked the list. Nobody else is CV. Nagaraja, but a marriage reception is different and marriage anniversary is different. So if it is marriage ceremony, then you are not fitting in this particular list of exclusions. At least in B point, you are not fitting. Obviously, if you fit in any other point, that is a different thing. But when you are saying marriage, I'm sure you are talking about B point only. So if you receive any gift at the time or on the occasion of marriage anniversary, exclusion does not apply. Mustafa, so sir, if someone gives you gift for marriage, why? For him, it is taxable. But why giving of gift is taxable? Ah, Divya Jain, what if marriage is called off? Oh, that's great question. So you mean to say somebody has given you gift before marriage, as I was giving example, and later on, what is this trapping question, Nagaraj? Every time you come up with this point, I don't understand what is trapping question. And please don't have that mindset that institute is always looking after giving trapping questions. Sorry, that is not the case. Out of maybe 50 questions, hardly there will be one tricky question. And that also uh, means people call it as tricky. I don't know from where you are getting this word. Last time also you're using this word trapping question, trapping question. I don't know what it is. But see, asking you question on some detailed part or analytical part, I don't think it is a trapping question. I will also not call it as a tricky question. It is part of something in the law. It is just testing how well you have understood the law. Okay. So, Mustafa, answering you, why giving of gift by someone is taxable in their personal expense? What it means? I did not get your point. Giving gift is never taxable. Divya Jain, what if marriage is called off? See, I never thought of this point because generally people give gifts only on the date of marriage or after that. Now, in this case, I'm sure your question will not apply. Your question will apply only if somebody has given before and later on the marriage did not happen. For some reason, it was called off. Like how recently, if I am not mistaken, one of our women cricket team star, her marriage was called off. And whatever last I read, even till date, the marriage has not happened because her father got suddenly admitted. So just I think a day before her marriage or on the date of marriage in the morning, her father was seriously admitted. I'm forgetting her name. Uh, she is one of the very good performer in this Women's World Cup. So in that practical case, I believe this exclusion will not apply. It means it will be taxable. This is my answer to this particular point. Neeraj is asking some gifts. Acha, it is Smriti. Okay. Some gifts is given by way given. Sorry, Neeraj is saying some gift is given way after the marriage. Will it also be exempt? I already answered this. If it is given after marriage, that is what is the discussion, Neeraj, on the word on occasion. It may be given before, it may be given after. Only you have to prove that it was given because of your marriage. So because you got married, but I could not come on that day. I let us say I'm staying in US. I come after 3 months to meet the couple, and when I come and meet you, I give you some gift. That is the meaning of on occasion. Kambira is asking, sir, whether alimony. Now, see, for alimony, there are different judgments. So we'll not keep alimony here, but alimony is not covered here. Let me tell you that. So, but the rule is like this for alimony. At the time of divorce, whatever alimony is paid, either money or as what you say, some property, that is outside taxability. But if the maintenance is to be paid every month after divorce, That is what is covered in income. Mustafa, giving gift also not taxable. I thought it is personal expense. Yeah, it is not income, it is expense. Okay, fine. Great. So, three things we discuss in this particular provision. One, gift means what? Giving something means now from the recipient side, getting something free or purchasing it for less than its fair value. Second, gift of what? Either money or something in kind. That kind is called as property, and that property should be your capital asset, and a list is given. Third, when this provision will not apply, that is when the gift received will not be taxed. It will not be taxed if it is received in one of these scenarios. Now, out of this, the first one, which is the most important exclusion, because in your exams, you will be given multiple gifts, and those multiple gifts may come from one of this person. So you have to exclude them. So how the question will be, as you will see below this also, and even in your test knowledge also, you will be given now, if there is a specific question on this, you will be given 10 items received. You have to first strike out what is not taxable. Why? Because it is falling in the exclusion list or because it is not your capital asset. Remember, for that question, when you are striking out the different amounts or the different items, you have to give explanation for each of the items, why you have included and why you have excluded. Keep this in mind. Such questions over here will carry 6 marks exclusively on this part, but you have to give explanation. Only giving the final answer that these 4 items total is the gift, that is incorrect. Incorrect means that will not give you 6 marks, that will give you only 1 or 2 marks. You have to give explanation to each. So 10 items are given, there should be 10 explanations. Why this is included in gift, why it is not included in gift. You have to give the explanation and then the working. Whatever you have given as included, you'll make a total and give the amount. If it is MCQ question, this all you will do orally and you'll add up and you'll answer which option is correct. Now, gift received from relatives is not taxable. Now, who are relatives? Now, they have defined relatives only for 2 persons. One is for individual, one is for HUF. For HUF, they have said that the member of your family. So HUF family member is what is relative for HUF. So if family member gives any gift to HUF, it is not taxable. Who are your relatives? Spouse. So your husband or wife is your relative. Gift received from them is not taxable. Your brother, sisters. Now here interesting is it may be real or it may be even step. Makes no difference. Then brother, sisters of your spouse. So simply it is your brother or sister in law. Then brother, sisters of either of your parents. So we call it as maternal from your mother side or paternal from your father side, uncle or aunt. Now see, in our respective languages, we have different words to differentiate. Like from our mother side, we have the word mamaji, we have the word masi. From our father side, we have the word chachaji, tauji, buaji, or there are different parallel words used in each of our languages. But in English, which will be part of your exam question, they will use the word maternal uncle auntie or paternal uncle auntie. Then comes any lineal ascendant or descendant. Now, what is lineal? Lineal means a straight line. So what will be covered in this? It will cover your children, grandchildren, or even great grandchildren. Again, children includes your or even step. This is your lineal descendant. What is your lineal ascendant? Same, your parents, grand or great grandparents. This is ascendant and this is descendant. Similarly, lineal ascendant descendant of your spouse. So lineal descendant is same, children. Lineal ascendant would be your father, mother, grandfather, great grandfather, all these persons in law. So father-in-law, mother-in-law, etc. And then spouses of all the above persons. So spouses of all the other person means for your brother, it is your bhabi, who is the spouse. For your sister, it is your jijaji. For your brother-in-law, sister-in-law, your sala, sali, and their spouses. For your maternal uncle, for mamaji, it is mamiji. For masi, it is masaji. All these are also covered. Now, what is very important to be noted is your maternal, paternal uncle, auntie is covered. So your mamaji, masi, buwa, all are covered. But your spouse's maternal uncle, auntie is not covered. So you have to keep this point in mind because many times we are assuming my brother, sisters are covered, my parents are covered, my spouse's brother, sister, parents are covered. Correct. So as far as brother, sisters, and parents are covered, it is covered for yours also and for your spouses also. But when it comes to maternal uncle auntie, your maternal uncle auntie are covered, your paternal uncle auntie are covered. So mamaji, masi, bua, chachaji, all these are covered. But the same relations of your spouse are not covered. So your spouse's mamaji, your spouse's masi, your spouse's chachaji is not your relative for the purpose of this section. So gifts received from them will not be covered in this exclusion. Yes, I hope you understood this. Neeraj, sir, if someone have black money and he gave the black money to his brother-in-law and brother-in-law bought gift from that money and give it on the occasion of marriage, very good. See, Neeraj, in fact, this is how black money was getting converted to white. So firstly, I used to give my money to you and ask you to give me gift. Why this gift provision is made? It is made for this reason only that I earned some black money. Now I give it to you and you give it to me as gift. Now, interestingly, if you are not related, it is tax to me. But what if you are related, like in your example? So we have something which, if you remember, we studied at the start of this chapter, but the details are not given in this chapter. They will follow in the next chapter. That is, if you remember, there was a term from undisclosed sources, income from undisclosed sources. Now, you have given gift to me. Let us say we are relatives of one of these points. So when you give gift to me, it is not taxable, but it will be taxable to you if you are not able to prove the source. Because if you are not able to prove from where did you get that money which you have given to me as gift, it will become undisclosed source of income in your hands, Neeraj. So that point which we studied at the start of this chapter, but the details are not covered in this, may be covered in the next chapter. There you will get this point. What? Income from undisclosed sources. So very good example what you have given. So let us say I give my black money to you and then ask you to give it to me, either on the occasion of marriage or because you are my relative. So that for me it is outside this taxable provision. Correct. So as gift, it is not taxable to me because we are fitting in this exclusion list. But you will be taxed under the other category or other provision of undisclosed sources. Right? Mustafa, cousins are not covered. But good point you raise. So see, Neeraj, IT is trying not to leave any point of taxing black money, right? So coming back to the point, cousins are also not covered because interestingly, your uncle aunties are covered here, but their childrens are not covered here. Please remember, cousins cannot be covered here because what it covers only lineal. So lineal is straight line. So above you, your parents, grandparents, and below you means only your children. Children of your uncle, sorry, your brother, sisters who becomes your cousins are not covered here. So good point, Mustafa. Why it is happening that only for Nagaraja's question, there is an auto reply of some gift from my side. It is not happening for anybody else's question. I'm not understanding why this is happening. I'm sure everybody else can also see this, that only for Nagaraja's question, CV, that is me, is giving a reply which is a GIF. I don't understand this. Okay. Sometimes technology is, at least for me, ununderstandable. So Mustafa is saying, no, it is not visible. No, it is, see, I think if you click on that word GIF, it is visible. So firstly, there is a reply going from my side. I am seeing two words, T and GIF. Acha, so I have to select the GIF. Okay, so there is no answer from my side. I have to select. But why it is only happening for Nagaraja's question? That I see a reply box below his question. नहीं हो जाने दो. Okay. Ambira says, sir, if black money caught, how much it's taxable? Again, see, if black money is caught, you have to see under which section you are taxing it. So there are different provisions. One is that undisclosed part. Yes, rightly answered by Devashish. If it is getting covered in the undisclosed part, income from undisclosed sources, which is covered from section 68 to 69. Yes, 68 and 69 cover that. 66, 67. Yes, 68, 69 cover that. There, as rightly pointed out by Devashish, it will be 78%. But if it is being taxed under section 148, then the regular tax rate applies. So this is what is interesting. This you will understand the difference at the final level. Mustafa says, so sir, son's wife and daughter's husband, both are covered. Yes, son's wife is covered, na? Because see, your son becomes your lineal descendant, your daughter becomes your lineal descendant, and the last clause covers their spouses. So you're right, Mustafa, your son's wife and even your daughter's husband, both are covered. Yes, right. Perfect. So students, what we have understood till now? We have understood that this section covers gift, which means if you receive either money or property, either free or you purchase it for less than its fair price, this is what is covered. And then the second part is there are some exclusions when this gift will not be taxed. And then the third part is definitions of different terms like property, like relatives. All this tells you the story up to this point. So out of 10 receipts, whatever we have studied, you have to select what is or what is not taxable. Now comes the last step. For whatever you have selected, that yes, these are the three items from the list which are getting covered in 56 to 10. Why? Because it is money or property. Two, it is not falling in the exclusion list. When both these are covered, both these are satisfied, so you select out of the list of receipts given these three items that yes, these three are covered. But then comes the last step, that is the valuation. Now, the law has given a limit that we will tax this only if it exceeds 50,000. So firstly, out of the list given of various gifts received, you will take what will be covered in 56 to 10. So as per my example, out of let us say 10 items, 3 items, or let me increase the number. So let us say 6 items are getting covered. Now when 6 items are getting covered, now you apply the next step or the last step, which is the valuation. Importantly, out of 10, 6 items are getting covered in 56 to 10 because they are fitting in money or property. In property, they are capital asset and falling in that list. And secondly, it is not falling in the exclusion list. So we have reached up to this point. Now for valuation, you will make 5 blocks, 5 categories, and you will classify these 6 items in one of those 5 categories. I repeat, once you have identified out of 10 receipts given which are falling in 56 to 10, applying whatever we studied till now, now those 6 items you have to classify in one of the 5 categories. Because for doing this 50,000 valuation, this categorization is important. Now, what are the categories? Category 1 is you have received money, and remaining 4 is property. Within property, you have first 2 categories for movable, and the other 2 categories is for immovable. Within movable, first is free, second is purchased. Again, immovable, first is free, second is purchased. So I hope you understood what are the 5 categories in which you will classify these gifts. Why you are classifying it? For valuation. Now, out of these 6 items, let us say the first item is money, this second, this third, this fourth, this fifth, and this sixth. So these are the 6 items. Out of this, the second item is here, third is here, fourth and sixth is here, and fifth is here. I hope you're understanding this. So money gift you will cover here. Movable property given to you as gift, either free or you purchase it for less price. Immobile property which you got free or purchased for less than fair price. This is how you make 6 categories. Sorry, 5 categories. So whatever is gift, classify into these 5 categories. Now important. What is this? Aggregate, 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 individual, individual. What do I mean by this? So in my example, only one item is covered because money gift is only one, right? So out of 10, firstly, I found out what are the items which are covered in 56 to 10. So I found 4 are not covered, either because they are not property or because they are falling in the exclusion list. So I removed it. Now I have remaining now whatever money is received as gift. As gift means falling in 56 to 10. Let us say in my example, only one item is covered. But let us say you have received 3 different items. Somebody gave you 10,000, somebody gave you 18,000, somebody gave you 30,000. You will add all those items and you will take the aggregate. And if this aggregate exceeds 50,000, it is considered as your first taxable gift. So I'm using 2 words. One is gift, one is taxable gift. So what is fitting in 56 to 10 as per our exclusion and all these? That is gift. What is not fitting is not gift. First point. What is gift? You make 5 categories and classify your gifts in these 5 categories. Now, in some category, you may have only one. In some category, you may have more than one. Importantly, for the first 3 categories, that is money and movable received free, movable purchase for less than fair price, you have to aggregate all the gifts falling in that and then compare it with 50,000. But what is falling in immovable, both free or purchased for less price, you will check individual value whether exceeding 50,000 or not. This is the last point that you have to understand. So giving you example, money. Within money, in my example, In my example, only one case is covered. Let us say three different money gifts are covered. Your friend gave, your non-relative gave, or somebody gave, but it was marriage anniversary, not occasion of marriage. Then if there are three different money gifts, you will add up all the three money gifts. So one is 10,000, one is 18,000, one is 30,000. If you individually look at these three amounts, none of them will be taxable because they are not crossing 50,000. But the rule is you aggregate the money gifts. So 10 plus 18 plus 30. How much it will become? It will become 58,000. So since it exceeds, the aggregate exceeds 50,000, I will have my first taxable gift, which is money, and the amount is entire 58,000. 50,000 is not deducted. 50,000 is not exemption. 50,000 is only a criteria to decide whether that gift will be taxable or not. Coming to second category, what you have received? You have received some movable property free. Now, what are movable properties? Jewelry, archaeological collection, work of art, all these things. Now, let us say here, I have received only one gift, which is jewelry. What I have to take is, I have to take the fair market value. So for movable properties, how to decide the fair value? You have to take the fair market value. Now, in case of movable, which is received free, free means complete free, gift, what we call as. So I received jewelry on the occasion of my marriage anniversary. So marriage anniversary is not in the exclusion, and the person giving gift is not my relative. Let us say my friend gifted me jewelry. My friend gifted me a gold bracelet. Now what I will see is, I will see the fair market value of this. If let us say the fair market value of this is 45,000. I know the example practically is impossible, but just to give you the feel. If the value, fair market value of this one gift is 45,000 and I have only one item in this category, it will not be a taxable gift. So my second category will have no taxable amount. So let us say I'm making my final list, taxable gift. So first category, money, I have written 58,000. Then movable property, and it is received free. I have received one gift here, 45,000, but I will write not applicable. But let us say here also I received two different gifts. One person gave me gold bracelet, one person gave me a silver bullion. And both these are properties for me, and the persons giving me are my friends, they are not my relatives. Again, the rule is I will add, I will aggregate. If let us say the aggregate of both these gifts received is 75,000, then I will write 75,000 here. But in my example, I'm considering only one gift and the value is 45,000. So answer is not applicable. Then comes a third category, movable property purchased. Now here I said there are two cases. Now what are these two cases? I purchased a work of art, which is again property, and I purchased jewelry. Again, I purchased both of these from a non-relative person. So let us say one of my friend was shifting to Denmark. So he was giving or selling off his items. So he had a very beautiful work of art whose FMV is 1.5 lakhs. Since I am friend, he gave this to me for 60,000. Or let me say, not 60, uh, let us say 1.2 lakhs. So his work of art, fair market value is 1.5 lakhs. He gave it to me for 1.2 lakhs. Now, in case I have purchased something for less than its fair value, I've already given you here what you have to do. You have to take the difference. So what is the fair value? Fair market value 1.5. What is the purchase value? It is this. So how much is my benefit? My benefit is 0.3, 30,000. Secondly, jewelry. Again, I purchased this jewelry from a person who is not my relative. Fair value is 2.5 lakhs. I purchased it for 2.25 lakhs. Again, here, how much is my benefit? 0.25 lakhs. So here it is 30,000. Here it is 0.25 lakhs, that is 25,000. Independently, both are not taxable. But again, what I have to see, I have to take the aggregate here. So aggregate is zero point 0.3 plus this is 55,000. I will write 55,000 because I have to take the aggregate. Then comes immovable property. I received free or I purchased from market. Now for immovable property, the value which is taken as fair value is the stamp value. So you will see the stamp value. And importantly, even if let us say I've received 4 different immovable properties as gift. In 4 different cases, I have received immovable property as gift. Somebody has given me land, somebody has given me residential house, somebody has given me office, somebody has given me shop. Again, first, are these properties? Yes, all of these are properties because none of them is rural agriculture land. So it is property. 2, is it falling in the exclusion list? Is it on occasion of marriage, under will, contemplation of death, or from relative? No. Let us say. Now, in this case, if I have received 4 items, I have to take all the 4 items individually. Means while checking the 50,000 limit, I will not aggregate it. This is the important point for immovable property. So for immovable property, I will check 50,000 for each property. Now let us say the first property which I have received free, the immobile property stamp value is only 40,000. Now practically again, this will not be possible, but this is only for explaining with the provision. It is only 40,000 not covered. Second one's value is 2.75 lakhs covered. Third one's value is 3 crores covered. Fourth one's value is 20,000 again not covered. So for immobile property, what I want to emphasize is you have to take individual values of each property, compare it with 50,000. And then comes the last category, immobile property, which I purchased from market. Again, first test, what I have purchased, is it property? When it will be property, if it is not my stock in trade, if it is not rural agriculture land. Yes, I purchased 1 flat, I purchased 1 shop. So it is property, yes. From whom I have purchased, are they my relatives? No. So it means I pass both the tests. This is a gift. Now, how do I find out the value? Again, I have to take the difference. What is the difference? Difference is between the normal value and the purchase value. Normal value here is the stamp value. So from stamp value, I will subtract my purchase value and I'll take the difference. If the difference is exceeding 50,000, it is considered as gift. If it is not exceeding 50,000, it is not considered as gift. So here, let us say I've received 3 items or 3 different properties I have purchased. First 2 properties difference is not exceeding 50,000. Last difference is 80,000. Now, interestingly, for this last point, that is immovable property purchased, when you are taking the difference between stamp value and your purchase value, you have to also remember that 10% point which we studied in PGBP and then again in capital gain. What is that 10% point? That if the stamp value, which is higher than my actual purchase value, I have to first take 110% of my value and again compare it with stamp value. If this 110% of my purchase value is higher than stamp value, then it is not considered. This is what we studied in PGBP section 43CA. This we studied in capital gain in 50C. Same thing applies in gift 56 to 10. So if my stamp value is higher than my purchase value, so we say that I have got some benefit, but first check whether the stamp value is higher than 110% of my purchase value or not. If it is not higher than the 110% of my purchase value, again, I will not consider it as gift. So let us say out of 3, the second one which I have not considered is because the stamp value is higher, but not higher than the 110%. And the first one I have not considered because the difference between the stamp value and my purchase value is less than 50,000. So this is how valuation is done. And then this total will be finally your income from other sources from this category of gift, that is 56 to 10. So this is how you practically solve this category of question. Arun Sagar says, what are gifts received from relatives? Will which all exemption if I give to them? Arun, but I am not understanding your question. Please make it clear. Maithili, but at 0.25 lakhs in my example is the difference between the fair market value and the purchase value. That is of one item. But I have another item where again the difference is zero point 0.3, that is 30,000. So aggregate is I add 25,000 and 30,000. That is what is aggregate 55,000. So individually, Maithili, 25,000 and 35,000, each individual difference is not exceeding 50,000, but for movable, we aggregate. So whatever is the difference of the first asset, which is work of art, and the second asset, which is jewelry, I'll add the difference, 25,000, 30,000. Adding this both exceeds 50,000, so I take it as gift. Understood, Maithili? Right, students? I hope you all have understood all this. So with this, our other sources part is completed. I'll request you to please go through the entire module. I am not expecting that things will be crystal clear in first go. You should also not expect when you study it from your end with your pace by going through all the examples. I've already taken practical example here, but still, when you analyze it, that will give you the real insight. Yes, Mustafa, what you have understood is correct. So now we'll take a 15 minutes break. And after the break, we'll come back and complete the PGBP chapter's last part. That is two theoretical sections or two category of theoretical sections which we have left. Fine. So 15 minutes break, students. Yeah, yeah. So if I don't get that purchase point, market value minus, if I receive a gift from relative, which is exempt from tax, and later I give a gift to them, will that gift also be exempt in their hands? Is this correct? See, theoretically it is correct, but there is now see if it is done with the intention of tax evasion, you will study in the clubbing wala point that there is something called as cross gifts. If this is fitting in cross gifts, it will be taxable. If not, then prima facie, the independent transactions are non-taxable because they fit in the exclusion. Neeraj beta, this I am not explaining because it is part of tax calculation. For that, I'll have to take an example of tax calculation and explain. So if you can wait till then it will be better because then we will digress to tax calculation and it will complete our entire lecture in that. Sir, can father give received son's marriage occasion? It will be taxable. I just explained. So if father is receiving gift on occasion of son's marriage, that is not fitting in the second exclusion. Yes, if that gift is received by father from any of the relatives of father, it will fit in the first exclusion. Right, Nagraja? So now let me go to the topic which we will be completing from PGBP. Okay. Now we go back to PGBP chapter. In PGBP, we have this point of which is special provisions for computing your PGBP income on presumptive basis. Now, what is this presumptive basis? Till now, in PGBP, you studied that you will take the P&L account, you have various credit items, you have various debit items. You will check each of the items, then apply our two steps. Step one is steps where you segregate what is not related to PGBP, you will remove outside and put it in respective heads. Second step is applying PGP provisions where to the items which are business related, you will check as per provision what to be taken, how much to be taken, and then you will finalize the PGBP income. Now, this is the actual basis of calculating PGP income. Now, understand one thing. Whenever a law is drafted, whenever a law is created, especially a taxation law, which is also called as a fiscal law. So taxation law comes under the category of fiscal law. Important is we have to also take care, we means the lawmakers, the legislature, that the law is practically enforceable. If you create a law which is very hypothetical, which is very good in the books on paper, but practically it cannot be implemented, it means the law will practically fail. And if the law is practically failing, then that law is of no use. Now, in this particular case, the same ideology is applied over here when we talk about this part of presumptive computation. Now, how that ideology is applied over here. Now, this is what we have been studying in PGBP, how you compute PGBP income, which I am calling as actual basis. Now, what is the challenge in actual basis is, first challenge is you should have properly prepared P&L account and you should have all the detailed informations. Like if you remember, what were our important provisions, whether TDS has been deducted or not, if deducted, what date, by what date deposited. Then second, whether payments have actually been made or not of 43B items. Then if transaction is with relative persons, what is the fair market value? Then for each payments that you are making, whether it is exceeding 10,000 in a day. So all these details is practically not possible for small businesses, especially the ones who are in unorganized sectors. So small businesses who are in the unorganized sectors, they are not in a position practically to apply your PGBP provision, whatever we studied, allowed, disallowed, reconciliation. One, because they are not having detailed set of books. Two, because of the small quantum of their business, it is highly impractical for them to hire some qualified consultant like us, because that would be very costly for them. Now, what will happen if you have made your law so rigid that this is the only method of computing PGBP income? Then the law will fail in such scenarios, which is a very big part in India. I'll give you practical examples. So we have so many kirana shops, that is grocery shops. I'm not talking about the malls or the chain store ones, but I'm talking about the small ones which are there on one particular street or lane. You will find two or three such kirana shops. You have doctors who are having their small practice. You are having barber shops. These are some very practical examples. You have carpenters. Now, many of these are in unorganized sector, means what? They may not have proper education. Now, we'll say a doctor is highly qualified, but doctor is not qualified in commerce. So, and all these other examples like painters, carpenters, barber shops, grocery shops, salons, they may not have even basic education or proper education. Second, their quantum of business is so small that it may not be feasible for them to themselves maintain so many details required for doing the PGBP computation properly. And also, they cannot hire a full-time consultant accountant to do that. Considering this practical challenge, the income tax has curated many sections which says that, okay, instead of this, you follow a simple method of computing your PGBP income. And this method will be called as the presumptive basis. What is the presumptive basis? I will calculate your income using some ad hoc ratio, percentage, and that would be considered as your final PGBP income. So we will try to simplify the calculation part. This is what is presumptive. Now, as I said, there are multiple sections, but at our inter level, we have only three. But keep in mind, when you come to finals, you'll have 44B, BB, triple B, BC, etc. Many sections. But why they are not there? Because all those sections are dealing with either companies or for non-residents, which is not part of our syllabus. Now, I start with 44A. Now, what does 44A covers? Now, first, what you have to check is the applicability. Over here, it is called as eligible assessee. I will say applicability. What do I mean by applicability? That whether or not your business is covered under this presumptive list or whether this presumptive provision applies to your business. So check the applicability. Now, first is 44A. It covers what? It covers goods transport business. In GST, you call it as GTA. Here, they have not used the word GTA, but it is the same. Now, what they are saying, now see, I want two things. One is your business is small and you are in unorganized sector. So they are saying, if you see truck people, 95% of them are uneducated. Plus, since they are in the business of transport, they are continuously moving here and there. Many times they are moving outside the state also for delivery. So today, if they take a vehicle, let us say starting from the place in Karnataka, let us say Hubli, or let us say where I recently visited ODP, and they have to go to a place, let us say Delhi. It may take them around 15 to 20 days to go and come back. Now, this is the nature of their business, and they are generally in the unorganized sector, means they do not have proper offices. They themselves are not properly qualified. And if a person is having one, two trucks, then it is also a very small business. So for such goods transport businesses, what they want to ensure that the benefit is given only to small businesses. So the criteria is that the person should own not more than 10 trucks. See, instead of trucks, they are using the word goods carriage. Simple. If you see any of these vehicles which are running on the road, which are carrying goods or doing goods transportation, you will see on the face of it, of the vehicle, on the top above the windscreens, you will find here in yellow background, it is written goods carriage. That is a special passing they have to take from RTO for doing transport business. So that is why here the word goods carriages are used. You can, for simplicity, say trucks or these tempos who are traveling for goods transport. Now, we want small businesses. So what is the criterion? You should not have more than 10 trucks anytime during the previous year. Okay. What is the nature of your business? So we are still discussing the applicability part. The nature of business is you are engaged in the business of plying, hiring, leasing of these goods carriages. In very simple words, transport business and transport of goods. Now, if you satisfy this, then what is the presumptive or the ad hoc method of computing your income? For this purpose, we will classify your vehicle into two categories. One is heavy goods vehicle. Let us call it as big trucks. What is heavy or what is big trucks, that we will see. And other than heavy, so let us call it as small trucks or the tempos. Now, for these two categories, they have given two ad hoc methods which will make your computation simple. What is the method given for big trucks? Your presumptive income is rupees 1000 per ton. I will add one thing, per month. Per month is given, but it is given below here per month or part. So I just completed it here. So what is your presumptive income? It is rupees 1000 per ton per month. Now, what is this per ton? Is it dealing with the actual transport you are doing? Answer is no. Why? Because see, in fact, that is where the challenge is. As a transporter, maintaining such details of every transaction is not possible because I'm in unorganized sector, small business. That is why this provision is made. Now, if you are making the computation based on actual transportation, then it will be again the same challenge. They are saying no. This is per ton of the vehicle weight, which is already specified. See how the differentiation between big and small trucks is done. When we will go below, you will find that it is on the basis of the load capacity. So what is the load capacity? If the load capacity is exceeding 12,000 kilograms or simply 12 tons, then it is called as a big vehicle. And how is this gross vehicle weight, which we are checking, is computed? So gross vehicle weight is the total weight of your vehicle, which is certified and registered. So whenever you are passing a vehicle at that time itself, on the registration certificate of that vehicle, you get this details. And this registration authority is generally the RTO. So what is the weight which the RTO has certified? And most important, this weight has to be unladen weight, means it should only be the weight of the truck, not with goods. It should be the unladen weight. That is only the truck. And if there is any trailer or something attached to the truck, that thing, but without any goods in that. So this is the definition of big truck or heavy goods. Now let us say, for example, you have a truck whose sanction load is 15 tons. Now this is written on your registration certificate. So this is simple to calculate. Now importantly, if you have one such truck whose certified gross vehicle weight is 15 tons. Now my presumptive income is rupees 1000 per ton. So I'm multiplying it by 15 and this becomes my presumptive income per month. So I multiplied by 12 months. So it is, now for this heavy truck, my presumptive income is 180. Now let us say I have one more truck. The weight is 20 tons. Again, it is 1000. Now, importantly, this truck I had purchased on 15th of August 2025. So in this year only I purchased this new truck, which is having a gross weight of 20 tons and it was purchased on 15th of August. Now in this particular case, how will the calculation be done? Here, this part is important. This 1000 per ton per month is for every month or even part of the month. So even though August I have not used completely, but I will not fraction it. I will consider August as the complete month. So I will count the number of months. So it starts from August, which is complete, because even part, the answer will be same. So August, September, October, November, December, January, February, March. So how many months the truck is with you? It is for 8 months. So my income, presumptive income of this truck is 160. Correct. Now I have a small truck also. What is the amount for small truck? So for each other, any other vehicle which is not the heavy vehicle, that is small truck, it is even simpler. It is 7,500 per month or part. So now I have two trucks which are small trucks also. So another truck which is of only 10 tons. So this comes in small. So when it is tons, I will not consider the tons. I will simply make it 7,500 into 12 months. Correct? So it is coming to some. Then I have one more small truck. Let us say that tempo traveler, not traveler, sorry, the tempos, which is only of 5 tons. Again, it is small. Now this I sold during the year on 5th December. I sold it on this date. Now, if I have sold this stock on this date, again, the value is 7,500 into how many months? Even the December will be counted as whole month because of the same rule. They are saying this value is per month or part. So again, I have to count December. So April, May, June, July, August, September, October, November, December. I will count even December. So this is into 9 months. I hope this is clear to all. So this is how you find your presumptive income by this method. The most important, which is now common for all the three sections, is that if you are computing your income by this presumptive method, then it is presumed that all deductions from 30 to 38 are already allowed. So no deductions can be claimed. However, this person, or I'll say only this person, if this person is a partnership firm. Now, if you remember, we have studied for partnership firm, there is section 40 clause B, which allows deduction for interest or remuneration paid to partners. Only that will be deductible. So if this transporter is a partnership firm, so from this presumptive income, whatever is calculated, you are allowed deduction under 40B. That's it. This is your final amount. But no other deduction is allowed. This is the only deduction allowed. Again, common point, WDV of your assets is calculated as if depreciation is deemed to be allowed. Because here in this point, we have deemed that all deductions from 30 to 38 are allowed. That is, even depreciation is allowed. So your WDV of asset has to be computed by subtracting that deemed depreciation. Now, maintenance of books. In the previous last class of PGBP, we had studied maintenance of books. So for these people, the interesting part is that if they are showing or declaring their profits as per this section, then they do not have to maintain books. In short, those who all are following these presumptive income sections, see, the main point is why this presumptive is created in the law. I already gave you reason, because it is practically not possible for these people to maintain detailed books, maintain detailed records. That is why presumptive was required. So even the provision relating to maintenance of books has been excluded for them. So they are relieved from the provision relating to maintenance of books. Similarly, there is provision relating to compulsory audit, which we call as tax audit. Now, this tax audit also, which we studied in the previous class as the last part, is applicable on the basis of turnover. However, for these people, even they are excluded from getting the books audited. So neither they have to maintain the books, nor they have to audit their books. However, now comes the most interesting part. Now, all this relaxation of non-maintenance of books or not getting them audited is only if you are following this section. Following this section means computing income as per the above presumptive amount. Now, let us say above presumptive method gives you the total income of 7,50,000. Now, if you claim that your profits are lower than what? Lower than this amount which you calculated using the presumptive basis, then maintain books and also get the books audited. So if you claim that your profits are even less than this presumptive amount, then you have to maintain books and get them audited. In short, you have to prove it. So in simple words, this presumptive income section gives you the presumptive amount, which is your minimum amount. You can show a higher profit than that, we have no problem. But if you want to show a lower profit than this, then you'll have to maintain the books and get the books audited. Further, you will study in the chapter of advance tax that advance tax has to be paid in 4 installments. This person is given no relaxation. I repeat, this transporter is given no relaxation because they have to pay advance tax in all the 4 installments. But when we'll come to the other two have to pay only the last installment. This is relaxation for the other two, that they have to only pay last installment of advance tax. But for this third person who is goods transporter, they have to pay all installments. Now we come to the second presumptive income category, which is 44 ADA. Now this 44 ADA is made for whom? It is made for professionals, but not all professionals, only specified. Who are these specified? Doctors, engineers, architects, chartered accountant, technical consultants, interior decorator, and then they are using the word notified. In notified, what is covered? Film artists or your film stars are covered, company secretaries are covered, IT professionals are covered. So all these professionals, like we are covered in this. If we are running our profession, how? I should be either resident individual or I am running, because many times you'll see chartered accountancy firms are either individual firms, proprietor firms, or they are partnership firms. Most important, LLP is not given this relief because LLP, once you are forming an LLP, you are already doing compliance with the LLP Act where certain maintenance of books and all is made obligatory. So then we don't give you any relaxation here. But if you are only a partnership firm, not LLP, then you are eligible for this presumptive income. So the second category covers professionals, not all professionals, only the specified professionals, which includes CAs, doctors, lawyers, company secretaries. And the second requirement is that their business should be small. Now, when their business will be considered as small, if the gross receipt from their business does not exceed 50 lakhs in that year. Now, this I'm sure is too small an amount, right? Hence, they have increased this amount to 75 lakhs. So there are two limits for applicability of this section: 50 lakhs always, 75 lakhs, but only if your cash receipts are not exceeding 5%. In short, 95% or more of your business receipts are online or through banking channel. Now, practically, in our profession, majority, 99% of our receipts nowadays come through banking channel only, because we are serving people not sitting in our own place. We are serving people who are sitting across India. Even some of our clients are outside India. In such cases, when we are serving such people, anyways, there is no other option. So we as chartered accountants practically today are receiving 99% of our receipts through banking channel. So we all are eligible for the 75 lakhs limit. But if let us say your practice is more localized and people come and personally meet you, and at the time of meeting they give you the money and they give you the money in cash, then if that cash receipts exceed 5%, you are not eligible for this beneficial provisions. Now, if you satisfy all these, then what is the effect? The effect of this is that your presumptive income will be taken as 50% of your gross receipts. So the simple way of computing PGBP income will be whatever is your gross receipts, take half. Half of it will be considered as your PGBP income. Again, all deductions are presumed to be allowed. Most important, as we saw above, we can be a partnership firm and many times we are partnership firm. Most important, 40 clause B is not allowed. In fact, it is not allowed here also. Then it is only allowed here in case of transporter. But for both the other sections, 40 clause B deduction is not allowed. So even if you are a partnership firm, this 50% amount which you computed is full and final. You cannot deduct your partner's remuneration or interest to partners. Again, WDV is computed assuming that depreciation is allowed. So your assets will be reduced by the deemed depreciation. Now, again the same point. If you are following, yes, Maithili.
Sir, in that point, the second point, eligible business profession, that any profession specified in the section 44A whose gross receipts less than or equal to 50 lakhs in the relevant previous year is mentioned in my book, sir. But your book, it is 75% is there.
But so Maithili, last time also we discussed, you take the latest module, na? See, you would have registered earlier. So this is the amendment brought by the previous budget. So that may not be covered in your module. So download it. I
Okay,
think we
so
only discussed
but
last lecture.
it is
Sorry?
modified by 75%.
Sorry, beta.
It is modified 50 lakhs instead of 75%. Sorry,
Huh?
so for 75% instead of 50 lakhs.
I did not get what you are saying, beta. 75% you are saying?
In your book, it is. Can you scroll the your book, sir?
My book. Huh.
Yes, sir.
Tell me. Show me.
Yes, that you boxed that ball. You boxed.
This one you are saying?
Yes, yes, sir. 75 lakhs.
Huh, so what is the point? I'm not getting, beta.
Yes, sir. 50 lakhs is there in my book. It
Arey
is
beta,
modified.
Maithili,
Yes.
Maithili. Download this latest module
Yes,
na.
sir. Yes,
I
sir.
have
Okay,
downloaded
okay,
from
sir.
our BOS portal only. I am not getting anything separately. I download all things from BOS portal.
Yes, sir. Yes, sir.
So last time also, I don't remember with whom we had this discussion. I think with you only. But you have to download the latest module.
Yes, sir.
So it's okay, na?
Yes, sir. Yes, sir. Thank you, sir.
Fine. So take this latest module. Okay. Now, once I fit in this particular 44 ADA, that is, I am a professional, let us say individual or partnership, my gross receipts are below 50 lakhs or 75 lakhs, as we just saw. And I am fitting in this particular section by showing my PGBP income as 50% or higher, then again the same relief. I need not maintain the books. Also, I need not get my books audited. So this note is for both. No need to maintain, no need to get audit. But again, the same problem. If I want to say or show that no, my incomes is less than the 50% amount. So if I want to claim my profits to be lower than this presumptive 50%, in that case, I will have to maintain books, and also I will have to get my books audited. But now for audit, there is one more criteria given. When I'll have to get my books audited, only if my income exceeds the basic exemption limit. It should exceed. And what is the basic exemption limit? That depends upon the new scheme, old scheme, and which category you are in, right? So for partnership firms, there is no basic exemption limit. Only for individuals, there is a basic exemption limit, which depends upon the scheme and then depends upon your age. So accordingly, you have different basic exemption limits. So similar to the previous section with only one difference, that here tax audit in the previous section is applicable always if you are claiming a lower income. Whereas in this section, if you are claiming a lower income, tax audit is applicable only if your income is exceeding the basic limit. If your income is not exceeding the basic exemption limit, then tax audit is not applicable. This point is a relief. What is the relief? The advance tax, which everybody has to pay every quarter, that is 4 quarters of 4 installment. These people have to pay only in the last quarter. So only the last installment has to be paid by them. So this is what is for professionals. Now coming to the third section. What does the third section says? It covers whom? It covers everyone except the other two. So who is not covered here? One, the person who is carrying on the profession. Two, agents. Three, which is not written but it is obvious, goods transporter. So who is not eligible? This and goods transporter, that is obvious because for them there is already a specific presumptive income section, and this because the law does not want to cover agents in this presumptive income. Now 44 AD, which is this section, it is the general presumptive income where all businesses will get covered except these two. One, specified professions, because you have a special section for them. Two, goods transporter, because you have a special section. And three, agents, because I do not want to cover them in presumptive. Except these three, all businesses will be covered here. But again, I want people who are in unorganized sector. So again, I'm limiting this section only to individuals, HF, partnership firms, again, other than LLP. Because I want to cater to unorganized sector, and generally individuals, HFs and partnerships are in unorganized sector because they are at a very small scale. It is a family business. It is a business started by our ancestors and you are just continuing. Also, I will not give you the benefit if you are claiming special benefits under income tax. Why I will not give you benefit of presumptive if you are claiming special benefits like you are claiming deduction under 10AA or under heading C of chapter 6A? Because under these sections, when you have to claim special benefits under Income Tax Act, it makes audit compulsory. And once you are capable of maintaining your books and getting audited, why you require the presumptive section? So presumptive section will not apply where you are already claiming special benefits. So it applies to unorganized sector, so which includes individual HUF partnership firms. Two, it will not apply to three types of businesses, one, two, three, and for those people who are already claiming special benefits. Other than these, remaining businesses are eligible. Now again, it is applicable to small businesses How small is decided over here? Here, the turnover limit for deciding small business is 2 crores. So if your turnover is not exceeding 2 crores, you are eligible. Again, the amendment is that if your turnover has cash receipts not exceeding 5%, then up to 3 crores, you don't, not don't, you are eligible for this presumptive section. So, where your business has more cash receipts, you will fall in presumptive up to 2 crores. Where your business has less than 5% cash receipts, you will fall in presumptive up to 3 crores of turnover. Now, once you fall in this presumptive, interestingly, how do I compute your income? I compute your income in two parts because I have two percentages. So out of your gross turnover, I will see how much is in cash, how much is through banking. Whatever is in cash, I will multiply 8%. Whatever is in bank, I'll multiply 6%. This becomes your total presumptive income. So there are two presumptive rates. One is 8%, one is 6%. 6% is where the amount of turnover is received by you. How? The same rule, account pay, check, bank draft, or online approve medium. So if it is received by you in bank through one of these mediums, which we also saw in 48.3, on that turnover multiply 6%, and on the remaining turnover which is received by cash or bearer check or even by cross check but not account pay check, you multiply it by 8%. So you have to break up your business turnover into two parts and compute PGBP income by taking separate percentages. Now other points are common like the previous section 44 ADA. All deductions are deemed to be allowed. 40 clause B deduction is not available. So that above amount which you calculated by 6% and 8% is final. WDV will be calculated deeming that depreciation is allowed. Now here there is some difference. But first part is same. What? If you are showing that your profits are as per this section, then you do not have to maintain books and also no need to get them audited. So if you are showing your presumptive income at 6% or 8% or higher, don't maintain books, no need to get them audited. But if you want to say that your profits are less than this presumptive amount, then there is a challenge. Now here, the point is slightly tricky. Now, what is the point? I'll read out this point so that you understand it first. Now, in 44 AD, the point was simple that if in this year I am showing my profits as lower in this year, that is 25-26, I'll have to maintain books for 25-26 and get them audited, right? But similar is not the case in 44 AD. What does 44 AD says? If after declaring profits on presumptive basis under this section, it means earlier also you have declared your profits under 4480. So let us say last year in 24-25, I had also adopted 4480. Now, non-declaration on presumptive for any 5 successive years thereafter will disentitle the assessee from claiming this income on presumptive basis for 5 subsequent years. Now, what is this? So let us say previous year, 24-25, you computed your income under 4480, that is presumptive. Now the rule is, if in any year you compute your income by presumptive for next 5 years, compulsorily you have to use 4480. So if you use 44AD in 1 year, that is compute your income using the presumptive method. You have to compulsorily follow in next 5 years. Obviously, compulsory means assuming your turnover remains below 2 crore, 3 crore. Now, if you do not follow this, let us say in this current previous year, 25-26, you decide not to follow 44AD. Now, how will you not follow 44AD? By showing lower profits. So once you start 44AD, see, understand the gist of this. Once you start 44AD, that is, once you show presumptive income, you have to compulsorily follow it for 5 years. This is what they mean. If you break this chain in between, so I break this chain in between how? By showing lower profits. Now, we already saw in previous two sections that if you show lower profits, maintain books, get them audited. But in the previous two sections, it is applicable only for that 1 year in which you want to show lower profits. Here, the point is not only maintenance of books plus audit, there is a bigger problem. Once you break this by not showing your 44AD income, the problem is next 5 years. Next 5 years will start from 2026-27 to 31-32. So for next 5 years, cannot AD. So it is like this. Once you start 44AD, continue it for 5 years. If you break or if you opt out in 5 years, next 5 years you cannot opt in. This is what is slightly different from the previous two sections. So this is what this 44 ADA subsection 4 says, that once you opt out of this, you cannot opt in for next 5 years. And then last point is advance tax. Only the last installment you have to pay. You need not pay all the 4 installments. So this point is same like previous section, but this is the only separate point or different point. Is this clear? So students, this also completes our entire PGBP. So we have completed all the heads in total. Fine, students. Clear to all? Obviously, Divya. See, it does not need revision. It first reads consolidate. It needs consolidation. What is consolidation? See, you are hearing something for the first time. Now, first to clearly, deeply understand it, and then to consolidate it, that is, fix it in your minds and in your heart, you will require multiple reiterations. That I tell every time. So if you're only relying on the class and thinking that today you study once and you will be able to recall it in future, let me tell you, it will evaporate in hardly 3 to 4 days. So you have to be continuously touching it, studying it. Firstly, in fact, today itself, you have to go to both these chapters, the other sources, the gift part and this part in detail with all the practicals given in our module. Though we have also discussed the practical aspect, but you have to read it from the module. Once you understand it, then after a gap of 3-4 days, 1 week, reiterate. Again, after a gap of 2-3 weeks, reiterate. So first reiteration should be faster after 2-3 days itself, and then further iterations can be at the gap of 15-20 days. This will make it clearer and more consolidated. That is the main point. Krishnapal, he's putting the right, pressing the right button. Sir, how can we revise so much during exams? That is where you should make out, mark short notes. Like, see how I'm marking on every chapter. See, this is my method of studying. Whatever I study, I make it short so that in exams I am able to cover it up. And most important, Krishnapal and everybody, if you are reiterating after a gap of, let us say, 15-20 days, then maybe you may not be revising everything during exams, because if the reiteration is happening after every 15-20 days, what will happen? You will be able to recall. Like today, I have taught this subject for maybe more than 500 times till now. So now for me, I can close the book and teach. So to that extent, I remember, but it is not 100%. Again, for some parts, I will have to open the book because that is slightly faded, or I'm not exactly recalling whether it was 10% or 15% or 20%, or now I'm not recalling whether it is 2014 or 2020. So those things I'll also have to refer. But because of my multiple reiterations, Baki major part of the act, at least the concepts, the provisions are already consolidated. Now, if this is the case, how much I have to revise during exams? I have to only revise these things which is faded, the dates, the percentages, maybe one or two provisions which are heavy. So that is how you have to prepare for exams. Neeraj, yes, you have to revise better. Yes, Neeraj, Saransh is best. But again, I'll tell you, see, Saransh will only give you short, but for that you have to first consolidate. Dhanlakshmi sir, to come under presumptive, turnover should be at least, not at least, turnover should be less than 2 crores. At least means 2 or more. 2 or more is not correct. And for 44 ADA, it is not correct. For 44 ADA, that is for professionals, it is 50 lakhs and 75 lakhs. So turnover from profession should be below that, Dhanalakshmi. And from business, which is under 44 AD, it is 2 crores, 3 crores. Means it is not least, at least not 2 crores. At least means 2 or more. No, it means less than 2 crores, Dhanalakshmi. Yes, Pavan, whatever I am writing, it will be shared with you. Bank, loan agent, insurance agent, show income under PGBP. Perfect, Divya. So agents who are showing their income like bank loan agents or your insurance agents or even regular agents who are agents in regular businesses. So all people who are getting agency commission will not get. Yes, Harsh, beta, all notes will be uploaded. Don't worry. Fine. I purposely did not upload the notes so that by chance, if something comes here and I need to add it in the previous notes, that should be done. So now I'll be sharing these notes of PGBP marked, other sources marked, and CG, my short notes, and the marked CG notes. These four set of notes I will be sharing in this week's time. It should be available by the end of this week. Nagaraja, you can ask. I'm not uh, recalling what you asked at 9.05. So you can ask here. If you want, I will unmute you because now searching your 9.05 is difficult for me. Yes, Nagaraja. Go ahead, Nagaraja.
Sir, my voice audible?
Now audible, beta. Tell me.
Sir, my assumption in case assessee received a gift is marriage occasion but not filed under section 139.
हाँ. But not filed return under 139. Okay, ठीक है.
Yes, and then questions continued and received 10 lakh of rupees from relative. Other income is nil. Not
Hmm.
filed due date under section 139.
Hmm.
So in this case, taxable or exemption.
Exam beta. See,
My
filing
my
return
answer
does
is
not
exempt.
decide taxability. Even if you do not file return, if it is exempt, it remains exempt. Only when you go to deductions chapter, deduction under chapter 6, say over there, for some deductions, there is a condition that you will be allowed the deduction only if you have filed the return in time. That is only for deductions, not for exemptions. So if I do not file my return, but if my income is exempt, it remains exempt, it does not become taxable. Go ahead. Nagraja, go ahead.
Yes, sir. Continues this question. Received 10 lakh from relative. From
I'm
the 10 lakh,
waiting. Hmm.
10 lakh rupees from relative
Huh.
uh, is a marriage occasion, but other income is nil.
So, Beda, you already mentioned this. So now what is your question? I already answered this question. Na? Now what is your question in this?
As a taxable as or exemption.
So, Beta, I answered this. Na? I said it is still exempt. I just answered your question. Means I'm not getting why you are asking this again. I just answered it just now. That filing returns does not decide the or does not change the exemption. I just answered, na?
Yes, sir.
So what is your confusion? I answered it just a minute before when you asked this question for the first time. Now, again, I repeat, even if you do not file your returns, the exemption now does not change. Only when you go to chapter 6A deductions, in deductions, there is a condition that for certain deductions, you should file the returns, only then the deductions will be allowed. If you don't file the returns under 139(1), deductions will not be allowed. This condition is only for deductions under chapter 6A, not for any other section. So again answering, you will not be required to pay tax if that income is not gift because of relative or because of marriage.
Yes, sir. Clear.
Clear?
Yes.
Perfect. Fine. So anybody else has a question, students? Yes, Dhanalakshmi.
Good morning, sir.
Good morning, Beta. Tell me.
Sir, under section 4480A
Hmm.
and 44A for both, um, here we get one requirement of maintenance of books, no, sir?
See, 44AA is for maintenance of books, where the list of specified profession is given, and 44ADA says that the list of those specified professionals, which is list is given in 44AA, we are referring to that persons. This is what 44ADA says. So in short, 44ADA is covering those professionals whose names are given in 44AA. Now, tell me your question.
Okay. So, here this point is there, sir. However, if the assessee claims his profit to be lower, no, then we should
Hmm.
maintain the book and we should be audited. The book should be
Correct.
audited.
Correct.
But here
So,
it like means receipts to gross total receipt is more than 50, lesser than 50 lakh or lesser than 75 lakh, then we need not to maintain, no, sir?
no, beta, see. First is you fit in this section 44 ADA if your receipts are below 50 or 75 lakhs, correct?
Okay, yes, sir.
Now, two possibilities. Firstly, your receipts are above 50 or 75 lakhs. It means you don't fit under 44 ADA.
Yes,
Then you have to compulsorily maintain books as per 44 AA, right?
yes.
But if your receipts are below 44 ADA, below 50 or 75 lakhs, then 44 ADA, you are falling in 44 ADA. Then what 44 ADA says, now check, are you showing your income as per 44 ADA, which is 50% of your receipts or more? If answer is yes, I am falling in 44 ADA because of turnover or receipts being below 50 and 75 lakhs. And also I am showing my income as per 44 ADA, which means I am showing profits of 50% or more. Then
Okay,
I am given relaxation from 44 AA, that is, I am given relaxation from maintaining the books.
okay,
However, if my turnover is below 50 or 75 lakhs, it means I'm falling in 44 ADA, but I am not following 44 ADA. What do I mean by not following 44 ADA? I am
means
showing
50.
that my receipts, my profit is below 50%.
Okay,
So I am falling in 44 ADA because of less turnover, but I am not satisfying 44 ADA because I am showing my profits below 50%. Then 44 ADA says you have to maintain books. In
okay,
short,
clear.
44 ADA overrides 44 AA. So
Okay,
if you are not falling in 44 ADA, when your turnover is above 50 or 75 lakhs, then you are not falling in 44 ADA, you fall in 44 AA, you have to maintain books. But if your turnover is below 44, below this limit of 50 lakhs or 75 lakhs, then you fall in 44 ADA. Then 44 ADA says if you show income as per my rule, that is 50% or more, don't maintain books. If you do not show income as per my rule, maintain books.
okay, clear,
Clear?
sir. Thank you, sir. Yes.
Perfect. Something in chat box. Yes. So thank you all students. We complete all our 5 heads in totality. And this is again, I repeat, completed from my end. Your side of study starts now. We are showing you the light. So we are acting like a torch. We are carrying that baton in our hands and we are showing you the light. You see, this is this cave with so many beautiful artifacts. Now you have to yourself in deep, go and study each artifact to get the in-depth knowledge. So your role starts from now. So thank you, students. Take care, study well, and I'm sure you all will make all of us proud. First, by getting great marks in exams, and second, by becoming outstanding professionals and helping the society, helping yourself, your family, and also adding value to the nation. Value also and prestige also. Fine. Thank you. Take care. Done, sir. Yes, sir. Good day, Manish ji. Take care.